I am happy that my CryptoQ Media channel is back online. We anticipate XRP is going to hit a new record high very soon. It has been what seems like an age, but now that XRP's performance throughout November has made it crystal clear that it will not sit on its hands throughout this bull run, we can enter price discovery and everyone can melt. It is anyone's guess what occurs when they reach their objectives, be they material prosperity or a better life. The question is, what happens when you turn a profit plus? I won't even begin to speculate on how you intend to spend, invest, or manage that sum. What I mean is that you need to think about how this could affect your taxes. Okay, I guess this is the time for us to talk about it. Since we often simply talk about crypto, I don't think it's appropriate to bring this up on my channel very often. The market is currently falling. Because we are currently in an accumulation phase and also experiencing that rare occurrence of a bull run, it is imperative that you familiarize yourself with this information and its personal financial implications. An attorney named Jeremy Hogan just posted this discussion, and I recently came across it and thought, wow, this is really cool. Therefore, I will share with you some of his expertise in this area. While I do recognize that some countries do not impose any kind of tax on their citizens, I will make an exception for the United States. Being in a tax reporting region may prompt your accountant to inquire about your financial situation in ways you might not expect, regardless of your location. Additionally, I will just state that it is preferable to accomplish this on a positive note. Like, I know some people and they're feeling this urge, or maybe it's just something they're talking about on these webinars and social media, but they've decided they won't pay their taxes. That thought is absolutely disgusting to me. If you are not in favor of the current tax policy, you should advocate for its modification. Start a political movement if you want to make a real impact. Make an effort to sway those in power using the limited information you possess. Anyhow, you can't just ignore the law because you don't like it. There are consequences for doing so. Not at all. Because of that, something terrible will transpire. To everyone's attention, I pray this is noted. In any case, I'll provide you with the opinion of attorney Jeremy Hogan. Can you see a profit from your cryptocurrency portfolio? Great. Getting ready for tax season is a must. Time is running out. Taxes on cryptocurrencies, a quick overview. Cryptocurrency, similar to equities, is taxable because it is an asset. The IRS is an agency you should never cross. Make a payment for crypto. Can I just click the yes button in that part of the comments section? Please, the Internal Revenue Service is not someone to mess with, and I want you to know that you are legally obligated to pay all that is owed to you. According to him, crypto is troublesome for illegal operations and money concealment due to its intrinsic traceability. Even if you tuck your ledger away in your jeans, the IRS will still find a way to get to it. Taxation of cryptocurrency, like that of other assets, occurs only upon sale or use for investment purposes. The taxable amount is the difference between the basis, the selling price, and the purchase price. Consequently, it is imperative that you maintain a record of your XRP purchases if you intend to disobey. Things are going to get dicey for you if you can't. Important because I'm aware that some of you might be utilizing decentralized exchanges and the like. Someone needs to be able to monitor this. Right now, I'll tell you why. That's what the lawyer, Hogan, says. Make sure you remember this, it's crucial. He cautions that failing to determine a purchase price puts taxpayers at danger of paying full tax on an item's value. Could you please check if what you just said was understood? I really need to know. Be honest and tell me that you focus on what's really essential. He continues by saying that there are programs available for purchase that can assist with this. Centralized exchanges that follow US standards will provide you with documentation at the end of the year that basically displays your cost base and sales. Is that correct? Now I'm going to take a brief break. As far as anyone who has been following the cryptocurrency space for more than a year can tell, this is no secret. If you are in the United States, they will handle everything on your behalf. If you choose to participate in decentralized or rebellious actions rather than that path, there will be extra consequences. You can be sure that you will not be able to avoid this. It will only hurt you in the long run, so don't do it. After then, try to imagine yourself in a scenario where. Envision a world where you might have avoided consequences for this long ago. What if, however, your investments go belly up? What happens if your financial choices are not wise? Even if the IRS showed up, you might not have the money to pay them. Please, you do not desire it. Being truthful is just not who you are. Finish it. Be honest and do what's right. Those of us who think taxes are unfair have the right to hold our ideological views. I refuse to participate in that. Listen up, I won't stand in your way if you follow orders. Opposing it or trying to get it changed is the next phase, as previously stated. If they so want, any citizen can look for ways to affect policy change. I am in agreement. Following that, he elaborated on the process of transferring cryptocurrency across different wallets or even between other exchanges. Even though it is not a taxable event, it is nevertheless important to keep track of it so you can find your original cost basis. Many have probably asked, what if you just moved it, as the directions suggest to let it sit for a year? As we'll see in a bit, long-term capital gains are ideally subject to taxation. What would happen if you brought it indoors? What makes a reset its preferred option? What happens in this situation, however, you are able to move? It is true that Hogan, the lawyer, makes that case. A simple wallet-to-wallet transfer will suffice, regardless of whether it's on an exchange or not. No, there are no consequences from an offensive perspective. As a result, he says you should monitor your cost basis. His next statement is, pardon me, but when you swap cryptocurrencies, it could be considered a taxable event. Wow! Hearing that is something I truly despise. Indeed, and it's just awful. This will be treated by the IRS as if you had bought and sold cryptocurrencies in the same transaction. Using 500 worth of Bitcoin as an example, you would have just earned 500 in taxable income if you had exchanged it for XRP when its value reached 1000. It stands this way even though I fail to see any reason for it. Using cryptocurrency as money in the US right now isn't a good idea because every single one of your transactions is a taxable event. It is my hope that this will now change. Although it might not be accurate in every single location on Earth, it is still naive, so we'll just have to watch. But things are set to change when Trump takes office on January 20th, making his government the first in history to be crypto-friendly. Just give it a little time. Nothing has to happen for us to be happy, in my opinion. How much is crypto taxed? He further inquires. When a taxable event happens within a year of purchasing a security, similar to stocks, short-term capital gains are due. I despise it. Essentially, it is seen as a source of regular income. If you fall into the 32% tax category, you'll have to pay 32% on your cryptocurrency gains. In the range of $47,000 to $100,000 a year, a rate of 24% is applied, and so forth. Nevertheless, opportunities for short-term capital gains are always bigger. You should hold onto your cryptocurrencies for at least a year if you want to benefit from long-term capital gains. Thank you for watching my video. I truly value your time. Click the subscribe button and then tell me what you think when you're done.